Hey there, it's Lorne Andrews here from Dominion Lending Center's Expert Financial and OptimalFinance.ca. Today we're going to be talking about 7 factors for choosing a home at a right price. Buying a home is one of the biggest investments you can ever make, and it's so important to actually really strategically think about how you want to do it and plan ahead. So factor number 1 we're going to talk about is how long you're going to live there. When you're buying a home, the transaction cost of buying a home can be quite substantial. So they would include real estate fees, legal fees, it could be land transfer tax fees, and if you're selling in a down market, you could also be affected by the amount of equity you're building up in your home during a short period of time. So if you don't plan on living in that home for at least 3 to 5 years, you may not gain enough equity in that home to make selling worthwhile. So in that case, you're probably not better off buying in the first place. The number 2 factor is how much house do you need? Sometimes we're making decisions based on a situation. So for example, a growing family, and we're trying to get into a home within a shorter period of time, and you may incur extra costs in trying to do that because the home might not be exactly what you need. On the other hand, buying more house than you need incurs extra maintenance costs, energy costs, and taxes. So you got to be aware of that. Third factor we're going to talk about is your credit rating. Okay, the higher the credit score, the lower your mortgage rate will be. Spend at least, if there's any credit issues, you want to spend at least a year trying to improve your credit scores. One of the magic moments, magic marks, is to get to about 680. One of the other things I'm going to talk about with the credit scores is many people are pulling, Credit Karmas and everything else. Just be aware that those are not the same credit scores that the banks use. And a lot of times when I'm dealing with my clients, they say, hey, my credit score is 700 and something, and it ends up being 600 and something with the Equifax or TransUnions that the banks use. So we can look at those and really assess what needs to be done. So I would check your credit report regularly. Be careful when you apply for new credit cards. You want to keep your balances on those credit cards below 50% of whatever those limits are, and just make sure you pay everything on time. Also keep in mind that cell phones are also showing up on bureaus, and you want to make sure that those payments are done on time as well. Factor number 4 is closing costs. So closing costs, while we're saving for the down payment, we also have to save for closing costs, and they could range anywhere from 3 to 5%, depending if you're a first-time home buyer, if you're buying within Toronto where there's a second land transfer tax, that type of thing. So you got to be aware that that is a factor as well that you need to account for when you're saving. Factor number 5 is your realtor. Okay, using a realtor can help you focus your search, find more listings, save time, and there's absolutely no cost to the buyer. So you want to make sure that you leverage your realtor to guide you through that process. Number 6 is what can you afford? So as your home loan strategist, our job is to analyze your situation, optimize your purchasing power, and make sure that in advance you know exactly how much you can afford and what those monthly mortgage payments will be. From that, we can even say, okay, you know what we're going to be doing is let's take this on a test drive for a little while, and what your mortgage payments are going to be, let's try and make sure that we're banking that. And we'll factor in existing rent and everything you're paying right now, but make sure that you start getting into the rhythm of what a regular mortgage payment will do for you. And at the same time, that not only helps you stimulate the ownership stimulate yourself for home ownership, but it will also help you force more savings. The pre-approval. So the pre-approval is a really important part of this process. And understanding what we do with the pre-approval is really looking at what the lenders are going to be looking for when it comes to an actual purchase. So before you start shopping, you want to make sure you get pre-approved for a mortgage. You really get a rate guarantee, but understand that even with pre-approval, sometimes there's factors that there's still issues that may come up in terms of when you actually make an offer. A bank can do a pre-approval, but if you're putting less than 20% down, the pre-approvals are not done by CMHC or Genworth. They only work on live deals, so we have to be aware of those factors too. We help you navigate through that to make sure that there's anything that comes up might be an issue. Listen, Any questions that you have, we're here to help. So please don't hesitate to reach out. And, again, we're here to help you.